Hey, hello. This is my second video on YouTube, I guess, for ACCA prep, and I don't know what else to say. Yesterday I particularly didn't like my face on the screen, and I was thinking like, oh, I think I look fine, but I don't know what's wrong because on the screen it doesn't look very nice. But today, surprisingly, I've been really liking how I look. And maybe for ACCA prep video, it's like live streaming. It's not something that is relevant to the content, but I'm just saying because this is not only ACCA prep video, but also about personal stories and chatting. This video is taken solely for me, and it will be like this for a while since no one is watching for now. Hopefully in the future, if I become a little more popular, then I can reduce telling my private stories, but focusing more on the actual content. So yeah, shall we start? Let's go. So I'll make my webcam smaller and actually, hmm, how do I do this? Yeah, I think this is enough for now. Or should I make it a little bigger? Okay, I think I'm ready. It still feels very strange that I'm speaking in English and this is also a monologue. It's just like when you do a higher view interview, like recording videos for like a minute, answering a given question. And this is very embarrassing. And honestly, I'm really bad at this. I fear that. It's like, I don't know who will watch this video, and definitely the person that I don't even know will gonna judge my like responses. That's for me, that is one of those biggest fears that I have. Well, I'm literally practicing it by making these videos, so hopefully I'll get over it. Okay, let's start. So, where do I? Okay. We were doing chapter 3. I'm still on chapter 3, to be honest. And I have got like 7 days for prep. Well, I still believe I can do it. Actually, I don't, but like, I have to convince myself that I can do it because it's It wasn't anyone else, but it was me who left it be like this in the end. So I should be responsible for my own delinquency. What page was it? Oh, okay. So we're doing here 1.7 of chapter 3. And I'll make the screen less bright. So we're doing, what are we doing? Revaluation and depreciation assets. I don't understand yet what the differences between this 1.7 and the one that we just did about surplus and expenses in 1.6.2. Well, we're gonna read it. I'm gonna read it. There's no we because no one's watching this video anyway. Timing of the revaluation. When a revaluation has taken place in the year, we must be careful as to how to calculate depreciation. I have depression. Revaluation at the start of the year. Depreciation for the year is based on the revalued amount. Okay. Revaluation at the end of the year. Depreciation for the year is based on the cost of valuation brought forward at the start of the year. Depreciation for the year must be deducted in arriving at the carrying amount of the asset at the date of valuation. Revaluation midway through the year. Two separate depreciation calculations are required. Pro rata on the brought forward cost or valuation to arrive at carrying amount at the date of valuation. Pro rata on the revalued amount. Okay, I read it with confidence, but I barely understood anything. So, I don't know, maybe I should be ashamed of it, but still, I'm not gonna be because I believe that I'll develop myself and will be equipped with more skills in the future, and I'm just in the middle of the process. Believe the process. Okay. So we have to be careful about the amount of depreciation if revaluation occurs during in the middle of financial year. Well, first at the start of the year, and then yeah, we do this based on the newly revalued amount, like price of and when we do it at the end of the year, then the total depreciation will be based on the depreciation, the price, the revalued asset price recorded at the start of the year. And when later we get carrying amount, we compare carrying amount and fair value at the end of the year, and we get the difference. Okay. Depreciation and the revaluation surplus. There is a further complication when a revalued asset is being depreciated. A revaluation surplus normally means that the depreciation charge will increase. Normally, a revaluation surplus is only realized when the asset is sold. However, when it is being depreciated, part of that surplus is being realized as the asset is used. The amount of the surplus realized is the difference between depreciation charged on the revalued amount and the lower depreciation, which would have been charged on the asset's original cost. This amount can be transferred to retained earnings, but not through profit or loss. Phew. I think I understood half of it. Let's see the translation. Again, I'm ashamed of still using the translator every single time when I try to understand the concept, and this is also quite frustrating after spending 7 years in the UK. But I still need to do it because otherwise, I'm not gonna digest it well. So let's just think I'm just learning, and it's fine. It's okay. As long as I can understand, as long as I can apply this concept in the actual exam, which is in English, then I think it's fine. Like these days, even today, during the day, I thought I really need to tell myself that things are fine and things are going okay, and it is okay to make mistakes, regardless of its size. What? Mm. Like everybody else, I want to achieve better than others, I want to achieve higher than others, and this gives me a huge pressure. Uh, or just feeling pressure doesn't make anything change, but only makes me feel more disappointed about myself. So, um, caring about my mental health while studying is quite tough, but both of them are really needed. And I have no one else to talk about this, so I sent my ex a message that I hope he's well. I didn't say like, oh, I miss you, I wish I was with you, or something that makes him feel pressured. Well, I just said like, hope things are going okay, and he hasn't replied for 2 days. Um, when I know that he never stay away from his phone. This is quite sad. Well, it just proves that how much we are not a good match. So it helps me convincing myself that he isn't the one for me. And it helps me to recover it. Ironically, that's a very ironic situation, but yeah, hopefully I think as well. Hopefully. I only have good intention really at this point when things ended and I don't have any hope. The only hope I have is like I hope he is happy and he sometimes thinks of me and think I was a good one. Oh, fine. Okay, let's go back to let's go back to studying. Fine, it's okay. Example. I'll just read it. I'm not gonna translate it, and I'll just skip it. To be honest, I have not enough time to actually dig in. Example, transfer of revaluation surplus to retained earnings. If an asset is revalued from 100,000 to 140,000 and has a remaining useful life of 40 years at that date, a revaluation surplus of 40,000 is recognized. Yeah, I understood. The valuation surplus can then be transferred to retained earnings over the remaining useful life to represent the depreciation. Okay. Difference as a result of the asset being revalued. It can be calculated as either revaluation surplus or 40-year remaining useful life, so 1,000 per annum, or depreciation per annum if value of asset is 100,000, 40 years, 2,500 per annum. Depreciation per annum if value of asset is 140,000. So 40 years, it will be equal to 3,500 per annum. Therefore, additional depreciation of 1,000 can be transferred from the revaluation surplus to retained earnings. Following entry can be made annually over the remaining life of the asset. Debit valuation surplus, because revaluation surplus is the increase of equity. Then why does it go to debit? Okay, retained earning is equity. And then revaluation surplus. Revaluation. Okay, retained earning. I'll check my phone because I'm addicted to my phone. Okay, I had enough free time. And I'll just have a sip of water. Okay, let's start. Can I just check? Oh, who am I asking to? Okay, I'll just check how I look. I look so dark. Right in front of me, I'm playing a YouTube video which is just white lighting. I'm not using the white actual lighting on the ceiling because the direction comes from here. So it doesn't make my face look brighter right in front of it. Well, I kind of look so dark. Fine. Okay. Activity 2, Evaluation and Depreciation. I'm gonna skip it. I'm gonna skip. It's too much. It's too much. Okay. I don't think I should skip it. Should I? Should I? No, I'm gonna skip it for now. Sorry. I'll just read all the concepts really quickly and then try it shortly after and I finish it. I think doing all the activities while learning the concept is quite a waste of time. Okay, 1.8 assets with two or more significant parts. Depreciation of assets with two or more significant parts. Large and complex assets are often made up of a number of components known as the significant parts, which each have different useful lives and wear out at different rates. For example, a building may have a useful life of 50 years, but the lift within that building may be expected to last for 15 years. IAS 16, paragraph 43 requires that the component parts of such assets are capitalized and depreciated separately. Okay. Illustration 3. Depreciation of assets with two or more significant parts. An aircraft could be considered as having the following components: fuselage, undercarriage, and engines. Those are all important parts. Understood. And each costs differently. So 20 grand, 5 grand, and 8 grand. And useful life also differs. 20 years for fuselage, 500 landings for undercarriage. Oh, it's not time. Okay, 1,600 flying hours. Okay, calculate the depreciation for the year. Depreciation at the end of the first year, in which 150 flights totaling 400 hours were made, would be fuselage, undercarriage, engines. Okay, so $20,000. Okay. I'm so used to pounds, and I don't want to speak like, oh, I'm from Britain. I feel this British just when I see this like something thousand numbers, then I just say, oh, must be pound, must be in pound. Oh, usage 20,000 pounds for. I'm so I'm too excited. How can I be excited this much alone? Like, I'm actually realizing talking is fun even when there is no lesson. I love talking to myself. Sad. It's better when I can interact with others, but still. Well, I also think it's perfect for creating like teaching videos because I won't feel bored by making it. Okay, anyway, fuselage is was $20,000 and it can be used for 20 years. So per year, the cost will be, of course, $1,000. Undercarriage, it's $5,000 for 150 landings. Oh no, for 500 landings. And per landing, then it will be no, $10, right? But in 1 year, there will be 150 flights. So the cost will be $1,500. Yes, all right. Okay, I think I understood it right. The engine's the same logic, it's just calculation. Okay. Replacements and over owls, owl, animal. I feel like I'm being a clown. I am sometimes, but I didn't know I could be a clown alone. Like if the loneliness gets maximum. Anyway, overall, howl. I don't even know what it means.
Overhaul.
What?
Overhaul.
Overhaul. Overhaul. Overhaul.
Overhaul.
Overhaul.
Overhaul.
Overhaul.
Overhaul.
Overhaul.
Overhaul.
Overhaul. Okay. Take apart a piece of machinery or equipment in order to examine it and repair if it's necessary. Overhaul. Overhaul. Thorough examination of machinery. It's like kind of investigation, repair, maintenance, whatever. Okay. Yeah, I understood. So, replacements and overhauls. Part of some items of property, plant, and equipment may require replacement at regular intervals, often as a legal requirement. IAS 16 gives examples of a furnace that may require relining after a specified number of hours, or aircraft interiors which may require replacement several times during the life of the aircraft. The cost of the replacement parts should be recognized in full when it is incurred and added to the carrying amount of the asset. It should be depreciated over its useful life, which may be different from the useful life of the other components of the asset. The carrying amount of the item being replaced, such as the old furnace lining, should be recognized when the replacement takes place. Okay. I don't know what it means. So like I'm I'm doing this live streaming at 12:15 at night, so my brain doesn't function that well. And in the first place, me no English. I still have a lot of difficulties reading um, English passages and understand speedy. I think it's because I don't really practice. Um, okay. And I will practice from now on because it's not too late. I believe it's never too late, to be honest. Like, unless I have like 2, 3 years left of life, like, and I'm almost on a deathbed. Mm. The costing code to replace significant part, then we recognize is recognized as an asset, and we include to carrying amount. Then when we replace the old part to a new part, the old part, the amount of value of the old part should be taken away from the book price. Okay. I'll skip illustration. I'll just read it quickly. But when does this chapter end? Oh my god. I'm impatient because I've only got a week left and I'm here. It's okay. It's okay. Investment property. IAS 40. Investment property. Property, land or building or part of a building or both held by the owner of the lessee as a right of use. Okay. I'll just translate it and read it. Sorry, it takes too much time. My eyes hurt. My eyes hurt. I'm really irritated. Yes. I'm fine. Investment property is for capital appreciation. So this is not a property for actual use, but we want to sell it in the future and get profit from it. Or we rent it to someone and yeah, that's investment property. If it's for actual use, then it is excluded from investment property, but because it's not used for investment purpose, and if it's for sales, of course, it's excluded as well. And how do we recognize it? It has it has to be probable that there will be future economic benefits, and it should be able to measure it reliably. The cost, the cost of it should be measured reliably. Initial measurement. Okay, so initial measurement is measured with cost. Yawning. I'm sorry, maybe I'm feeling comfortable. I don't want to do this. I don't want to do this. It's okay. It's okay. I'll go through it. I'll become a chartered account. I'm not gonna be an account. I'm gonna be an accountant, and I'm gonna be a CFA, and I'll be someone amazing. So other people can admire it. Well, that shouldn't be the goal, right? Because I matter in this context. So like doing something for being admired in the future cannot, it's not a good reason. Should I quit? That's a powerful way to motivate myself. So this is why I don't like myself sometimes, because I realize that the nature of myself, how my thinking logic is designed, often clashes with what I believe is ideal. Huh. I'm not, let's not be too philosophical and depressing, too depressing. No, because I need to pass anyway. First I pass and then I think, right? I don't have to worry about anything as a chartered accountant before I actually become a chartered accountant, right? If I feel like it, do it, pass first, then think about it. For me, it works. I shouldn't overthink in advance. Mm, okay, it's okay. Let's do it. Owner occupied property. Hmm. Oh. Mm. Charlie. Finish measurement. Okay. Cost can be purchase price or directly attributable expenditure, such as professional fees or legal services, property transfer taxes, and other transaction costs. Self-constructed investment properties cost is the cost at the date when the construction or development is complete. Okay, that makes sense. Subsequent measurement, cost model or fair value model. Model. I cannot sound, I don't sound like I'm a professional. I mean, I'm not a professional yet, right? I'm just a student. But like until when I'll have this mindset that like, oh, I'm learning it, not something. Uh, okay, fair value model. There's no depreciation. We immediately take into account expenses or surplus to profit or loss. And there's a cost model. Okay. Once the model is chosen, it should be applied to all investment property. The biggest differences between cost model and fair value model is that fair value model doesn't have depreciation. And when the price changes, then they put it directly to the cost model is based on historicals when they've initially paid for buying the asset, and it has depreciation. But if the market price, the fair value changes, we don't take that into account. Hmm. And we'll only use it when it is for actual use is for actual usage. When we actually intend to use that property. Fair value model, on the other hand, eh, we update the fair value and we do not depreciate, or we just check the fair value annually, and that's what we record on the book. Uh, if there's any expense like surplus or expense decrease or increase in the value of asset, then we immediately process it as profit or loss, and we reflect it on the net income. That's the difference. Okay. Activity. I won't do any activity. I can't be bothered. Transfers. Because even I do these activities now, I'll forget it anyway. And like when I actually try to practice questions, then my brain will gonna go blank again. Won't remember a single thing. So transfers to or from investment property should only be made when there is a change in use. Okay, yeah, I understood. For example, owner occupation commences, so the investment property will be treated under IAS as an owner occupied property. Huh. I'm hungry. I'm hungry. I wish I could eat something fresh, crunchy, and sour. Thai papaya salad called som tam. I don't know how to make. Okay. Mm. Investment property to PPE inventory. How long have I been recording? It has been already an hour, right? No, really? I should take a break. As someone who is almost diagnosed with ADHD, I have a very short focus span, and I want to switch topic inside my mind, like, oh, to somebody I've been talking to, or something that I was working on, some other things that I've been working on, or about my family, or about the food that I had on that day. It's just inside my brain, there's a war going on. It's like the tabs open consistently, like 100 different tabs are opened, and every single second the new tabs opens by itself, and then I need to click X one by one, and then open the program that I want to use. That's how it feels, right? Like, well, I don't want to go. I don't want to go to see the doctor anymore. I'm just trying to embrace myself. I don't want to rely on. It's like mm, medical, mental health, medical treatments. Yeah, let's go. So when we want to change investment property to inventory, then first we check the fair value, the market price, and then we take that as new cost, purchase price. And then we apply new standards, because before IAS 16 was applied. For now, the property changed, like the nature of the property changed. So now we're using IAS 2 for inventories. And then, hmm, And then depreciation starts. Then we do subsequent recognition. Oh, hold on. As simple as that. Activity 5. Okay, I was 242. It wasn't 242. When does it end? It's almost the end! Okay, I'll finish this chapter and I'll take a break. Well, okay, I don't want to finish this chapter actually. I'll finish until 2. Finish until 2. No borrowing cost. Okay. 242. 42. How can I pass all remaining 9 exams if I hate studying accounting this much and I want to run away? Like, oh, I'm gonna have breakdown. It's okay. I got this. I got this. I have unlimited time with this. It's okay. I don't have to finish it in like a year or anything. Although I'm getting old. Everyone's getting old, so it's fine. There are things I need to say. On the day it happens, change from IAS 16 to change to IAS 2. We measure fair value and the differences between book value and fair value. We apply the same method as revaluation model. So if there has been a surplus, then we recognize it as OCI, other comprehensive income, and we accumulate it to revaluation surplus. When it has been a decrease, then yeah, we take away that amount from revaluation surplus that we recorded previously. Then we record it as a expense. Then after that, subsequently, we apply IAS 40. What do you mean? What do you mean? I thought we were doing like transfer from investment property to owner occupied property, but now, okay. Anyway, if fair value model has been selected to be used, then we don't do depreciation anymore. And then we recognize it as a profit or loss immediately when something happens. Okay, I think I understood like 20% of it. Hee hee. I don't know. Ah, 2.5 disposals. Why is my nose so itchy? Oh, it's just the tip of my nose. It's not even like inside of my nose. Disposals. Ah, disposal. Okay, yeah, we do dispose things. Just like our toxic exes. Um, yeah. Yeah.超かわいい. When there's no more probable future economic benefits, then we get rid of on statements, and there will be a difference between book value and real net disposal value and carrying amount. Then we recognize as income or expense. Yes, okay. There's a compensation available. We recognize as a profit at the point when our right to receive starts, like becomes receivable. Compensation from third parties for investment property that was impaired, lost or given up shall be recognized in profit or loss when the compensation becomes receivable. Okay. Disclosure requirement. Model and criteria for classification assumptions. Use the independent professional valuer, rental income, any restrictions, fair value model, reconciliation. Okay, and cost model, depreciation. That makes sense. Okay, from borrowing costs, I'll do it in the next live streaming. Thank you. I'll see you soon.